Hello everyone, this is Mayank and welcome back to my channel. So today we'll discuss about the LIC IPO. So we'll have a fundamental analysis on the LIC IPO, and based on that I will give my own understanding on the conclusion of what I'm thinking what will happen. So a lot of news are going on, a lot of news has been covered on LIC IPO. Even financial our FM has also told that they will go ahead with LIC IPO no matter what, right? So a lot of things are there on the plate. So we'll discuss one by one. But before we move further, first request that watch this video till the end. So at the end I'll discuss why LIC is also the biggest DII in India. Right. So DII as a domestic institutional investor. So for that, stay till the end of the video. Second thing is that your likes and your comments will only help this video to reach out to more and more people. So help me out with that. Your likes and your comments are highly appreciated. So let's jump to the analysis part. So if you see in this first I made a slide for this particular video. So there are a few fundamental points. So we need to know that LIC is the largest insurer in India and they are the fifth largest insurer in the world. This is by the number of policies they sold, also by the number of capitalization they have, right? So they have asset under management worth of 39 lakhs crores. That's a huge amount of money. You can just see a company is managing, it's a government backed company which is managing an asset of 39 lakhs crores. Right, and then every 3 in 4 policies sold in India is LIC. So LIC has 35% market share in the insurance field. So they have a millions of agents, foot soldiers, which are going door to door and selling their insurance policies by educating people, by making people aware that this is the need. But LIC has become a brand in itself. So if anyone thinks about buying any insurance product, LIC is the first thing which comes into mind. No matter how the privatization of this sector has moved far compared to what it was 10 years back, but still if you move to this tier 1 cities also, but if you move to tier 2, tier 3, tier 4, there is nothing beyond LIC market share. Okay, so whatever private companies are coming, they're mostly into tier 1, little bit is covered in tier 2 also, but overall 25% market share stays with LIC. So these are the few fundamental points. Second, few more are there, that see how this insurance company works. Insurance company take money from us as a premium, invest this money in multiple investment instruments. So multiple investment instruments are like stock market, so equity, then debt, then some bonds. Okay, so those are kind of investment this company does. So consider those investment. Right now LIC is sitting on a profit of 4 lakh crores. When I say unrealized gains, means based on the investment they are in 4 lakh crore of profit, right? They have not made money, like until they have sold it, we say it unrealized gains, so it's notional value. So that is 4 lakh crores. Embedded value of nearly 5 lakh crore. What is embedded value? First thing we need to understand. So for an insurance company, we cannot say this is the revenue and this is the profit or this is the loss this year. That doesn't happen, because whatever they sell today, the premium, based on that, whatever the money they have to return to the client, that doesn't happen immediately in that year. That might happen after 5 years if the person expires by any bad chance, or they pay some money after 20 years of the policy or 15 years of the policy term getting completed. So there is nothing called profit and loss each year that can be calculated in any insurance product or insurance companies. So that's the reason these companies come up with embedded values. Embedded value is the overall understanding of what is the investment made today and what is the profit that can be generated on this investment after a certain period of time. So that term is called embedded value. So right now the embedded value of LIC is 5.4 lakh crores. Based on this, the valuation has been done, but people who are in the market there and who are in the business are understanding that this embedded value can go up to 14 lakh crores in a few years of time. The way LIC is positioned in the market. So these are the few fundamental points which are in the favor of LIC, like the market share, their asset under management, the profits, embedded value. Everything is great when they come to fundamental points, but every good thing comes with some concerns, right? So LIC has also some concerns. First concern is the market share of private companies. So as I told you, compared to 10 years back, private companies have moved quite far, especially in tier 1 cities and a little bit in tier 2 cities also. What's happening is that the companies like SDFC, company like ICICI, they are using internet as a medium. They are using technology as a medium to reach out to more and more people. So people who are getting more closer to technology, who are more usage of technology, they are getting introduced to these private products, and because of this, the market share of LIC is reducing, though it is still 75%, but it is reducing percent by percent each every year. So that is the concern, that the growth of LIC might not be as fast as it was before, because private players are getting more attraction or attention from the market or users, I will say, per se, right? Second, important, these two are related. The lack of tech focus play and losing market share are related. So concerns that is losing market share. One of the reason of its losing market share is the lack of tech focus play. We'll come to that. If you open any LIC policy scheme details, then you will come to know that these products what LIC sells are not pure protection products. So when I say pure protection products, these are something like term insurances, where the companies charge you some money, but if something happens to you, then only you get the money. So that is a pure protection products, where if nothing happens to you, there's nothing in middle. It's yes or no. There is no gray in the middle. It's either black. Either you lose all the money because you are safe and sound, or you get money for what you paid the premium because you are not there anymore, or something happened to you based on the policy terms and conditions. But LIC, so this is what private players do. But LIC products are not pure protection products. Even if nothing happens to you, LIC pays you certain money when your policy terms completion, on the policy term completion. And if something happens to you, anyway, you'll get that insured amount. Okay. But since it is not a pure protection product and LIC is paying you even if nothing happens to you just by putting the money, it goes away from the profit. Just to make you understand, for example, LIC takes 100 rupees from 10 people, so make an amount of 1000. Okay, out of that 1000, they invested and made a profit of 5000 over a period of 20 years. Okay, I'm giving a very conservative example. So LIC's total amount is right now 5000 with them. Now, if nothing would have happened to any of the 10 people, okay, then LIC would not have to pay any money. They would have kept the profits. But since LIC is not a pure protection product, they pay some money to the everyone. Profit what they can generate from the insurance products are relatively lesser compared to private products, and this is the reason why LIC's profit will not become as big as private companies, considering the market share what it has. And this is a concern, because if the profit is not big, how the share market, how it will perform the stock market, how the investor stock market will get benefited, because we get the money, our stock rises because the company makes profit. Since LIC is giving away part of the profit, they are not realizing the profit on their financial balance sheet, and that is the reason as a stock market investor, as an investor in LIC IPO, we might not get a return relatively to what market share it has, related to what market share private companies has. I hope pure protection products is explained. If not, you let me in the comment section. Probably will create a video on differentiating between insurance pure protection products and other products where they are available in the insurance market. Third important was the lack of tech focus play. If you see the app of LIC, if you see the online websites of LIC, if you see the online websites and apps of the private players like HDFC Life, ICICI, or other companies on the same lines, there's a huge difference in the user interface, huge difference in the user experience. Everything in LIC, everything private companies are top notch compared to LICs. So this lack of tech focus play doesn't, two things happen. First, it doesn't let LIC acquire the tech savvy customers from diverse cities, and even if someone in there by their parental advice or by the advice from their family elders, some of them are definitely pulling away from LIC and pushing more on the private sector side. One of the reasons definitely the lack of the tech focus, the approach of what private companies take. Everything is good looking, everything is there on your palm, everything can be accessed from your app. But LIC doesn't work that way. It's really a very basic website what they have, and sometimes becomes very frustrating also to use this particular website. So I'll personally think LIC should focus on this particular using more tech in their overall customer reach. So this is my three concerns what I find here. Based on that, my personal conclusion are these three things. First thing, it might get oversubscribed also because of all the name, brand, and buzz in the market. And when something gets oversubscribed, there's a good chance that it will get a good listing gain also. Okay, this all depends on the market. The way market is crashing right now, I hope I think mostly this will happen. It will be a good oversubscribed IPO, and you might get some good listing gain also. But since there's no concerns what we discussed before, that it might not be a very good long-term investment because of profit issues, because of their products, pure protection products, or because of their kind of more customer focused approach rather than profit centric approach. they might not be very good long-term investment companies compared to other peer groups, right? And if we become successful, now the amount of money what is valued is 70,000 crores is the IPO size. If that is the real size of IPO, 70,000 crores of money will be sucked out from the market. Okay, so the liquidity will be completely gone. It's already interest rate getting increased, and so liquidity is getting out. Okay, so when 7,000 crores of liquidity goes into one particular stock, the other stocks which are into small market cap, which get some small amount of investment, a lot of those companies don't get money from the open market, and that leads to crash in those stocks, because those stocks don't get money and they can't do capital expansion, they can't do more work, they can't get more profitable. So this is a double-edged sword. If IPO becomes successful for LIC, the kind of money it's raising, other stocks will suffer. If it doesn't become successful, the market sentiment will suffer, again the other stocks will suffer. But I personally think success of LIC IPO can give a market correction. So this is something which I'm expecting. Let's see how it goes. I can be wrong throughout. I hope that LIC makes a lot of money for everyone who gets their IPO done, and if somebody is going to invest for long term. But please do your own analysis before making any bid to the IPO. This is my understanding. So as we told, that end of the video we'll see how big LIC is a DII is. So if you, I just opened ITC because I know LIC has made investment ITC. If I open DII, you will see that LIC, the Life Insurance Corporation of India, owns 16.2% equity in this particular company called ITC. Okay. Now if you click on life insurance, we'll get the list of all the companies which they have invested. So if you see this is huge. Just I'll scroll the list. I'll not go through every name, but you can see how big the list becomes. So LIC is invested in all these companies because of this particular reason only. LIC's unrealized profit is more than 4 lakh crores. This is huge list. If you keep going through, it's a never ending kind of list. Okay, and they have invested in every other major big companies. They are invested in Yes Bank also. They are invested in Welspun Corp also. There's a lot of companies we discussed in our channel, right? They are invested in Voltas also. This we discussed. They invested in Vedanta also. So if you see whatever list you see, the names they are everywhere. They invested in UPL also. They invested in Union Bank of India also. And we are only in U right now. If you go further, scroll down fast. They are invested in Syndicate Bank. They invested in Suzlon Energy. They are invested in Sundaram Fasteners. They are invested in around 400 plus companies. If you see the number. So this is the kind of control LIC has over all the equity markets. So LIC success can also pull the stocks also, because eventually they are invested in this company. The LIC success can also suck the liquidity out of market. So we can't be clear at all what is going to happen on the LIC IPO, but this is from fundamental point of view. This is how the LIC is placed. This is how the LIC IPO looks like, and this is what can happen if LIC IPO becomes successful or unsuccessful, which is very unlikely to happen. Most cases LIC IPO will be successful. So this is my understanding. I hope I was able to make certain point clear here. If there is any confusion, if there is something more you want to know, please do let me in the comment section. I'll try my best to reply to that. Thank you so much for watching. Stay happy, stay safe.